What's up YouTube? Today we're diving into 7 dividend aristocrats. Companies that have been raising their dividend for at least 25 years straight. But not all aristocrats are created equal. Some are thriving, while others are barely keeping up. Which ones are the best for your portfolio? And which ones might surprise you? Stick around because we're breaking it all down right now. In each round the winner will earn 3 points, the runner-up will get 2 points, and third place will receive 1 point. At the end, we total up the scores to determine the ultimate winner. And this winner is really going to surprise you, let me tell you. So without further ado, let's dive in. Starting with the market cap, to see who's the biggest company. And it has to be said that they are all massive companies. At the top of the list is CVX with 293 billion market cap. In second we have PepsiCo, which kinda surprised me with a 200 billion. Expected to see them a little higher, to be honest. And in third we have Caterpillar with 162 billion. The smallest company is Tiro with only 21 billion. With dividend aristocrats you have some kind of security on the precious dividend. However, things can change drastically when the company is not able to grow their revenue anymore, and a dividend cut becomes inevitable. So in order to prevent that from happening, we want to see some decent growth in the past 5 years. And top of the list is ADP, together with CVX. Both sitting at 6.6%, which is pretty decent. In second we have PepsiCo with 6.5%, also doing a pretty good job. And in third we have Tiro with 4.77%, which is not too bad. AFL is the only one reporting negative numbers, which is quite concerning. Next to that dividend growth, we want to see some steady and consistent net income growth. That has more or less the same pace or a higher pace than the revenue growth. In first we have CVX, for the third time in a row now, with a massive 43%, which is of course boosted by the events in the recent years. In second we have Caterpillar with 12%, also doing a pretty good job. And in third we have AFL with 10.5%, which is much needed since their revenue growth was at a negative number. And now the moment we have waited for, the dividend yields. And this is a bit of a tough one, because these are very different companies that I'm comparing here. But still, I have to stick with the higher the better in this case. So coming in first spot we have Tiro with a whopping 5.47% dividend yields. In second we have CVX claiming 2 points here. And in third we have SWK with 4.12%, also really nice. The lowest dividend yield is going to Caterpillar with 1.7%. The last points awarded before the halftime break will be the dividend streak. Since these are all dividend aristocrats, they have 25 plus years of increases. But there can only be one winner, so the higher the better. And coming in first we have SWK, with an impressive 56 years of dividend increases. In second we have PepsiCo, also reporting phenomenal numbers with 52 years. And in third we have AFL with 42 years. The lowest amount of years belong to ADP with 26 years. And now that we're halfway of awarding the points, it's time to see who's the halftime leader. And if you paid a little attention, you noticed that CVX was collecting a lot of points in the beginning. But let's start at the bottom of the list first. Coming in dead last we have AFL stock with only 2 points. In the fourth place, both Caterpillar and ADP share the spot with 3 points. In third we have SWK and Tiro, sharing the spot with a total of 4 points. In second we have PepsiCo with a decent 6 points total. And you guessed it, CVX is the halftime winner, with a total of 11 points. But don't worry, we still have 5 more rounds to go and anything can happen. Starting with the 5-year compound annual growth rate. And this is one of the more interesting metrics to look at. And there are some big differences here as well. In first we have AFL with an impressive 13.8%. In second we have ADP reporting 11.6%, also really nice. And in third it's T Rowe with nearly 10%. At the bottom of the list is SWK with only 3.7%. And one of the most important numbers in this score sheet is the payout ratio. You want to invest your well-earned money into a reliable dividend-paying stock. And you want the company to have enough cash left to invest back into the business. So the lower, the better. And Caterpillar is claiming 3 points here with only 25% payout ratio. In second we have AFL with 28%. And in third we have T Rowe with 53%. I prefer 50% or lower, so there's quite a few companies reporting payout ratios that are significantly higher than that. Next up is return on invested capital, telling us how good the company is at investing their money into the business. The higher the better, and ADP claims the full 3 points here, with an impressive 31%, massively outperforming the others in this list. Because in second we have Caterpillar with 19%, and in third it's PepsiCo with 17%. When buying a dividend stock, it's really important to look at the valuation. You don't want to buy an overvalued stock, so most investors tend to look at the PE ratio to see the valuation. And T Rowe is claiming the full 3 points here. In second we have AFL, and in third we have Caterpillar, who kinda surprised me, and collected 1 point. Both ADP and SWK look overvalued based on the PE ratio. The last metric of today is the total return in the past 10 years. And the reason why I'm taking 10 years over 5 years is that most of the time these companies don't do well in the mid to short run. But in the long run they really excel and report crazy high returns due to dividends. And Caterpillar is reporting a massive 437%, claiming the full 3 points here. In second we have ADP with 345%, and in third we have AFL reporting 230%, all really impressive numbers. But there are also some companies reporting really low numbers here, like SWK and T Rowe. So even including those juicy dividends, they didn't do too well in the past 10 years in terms of returns. And with the last points being awarded, it's time to sum up everything to see who's winner. And if you remembered correctly, CVX had 11 points, beating the number 2 PepsiCo with only 6 points during the halftime score. But is it enough to win the final round, because CVX didn't manage to score a lot of points in the second round. And coming in at number 6 we have SWK, with only 4 points, and they didn't manage to score any points in the second round. Number 5 is really surprising, PepsiCo, who was the halftime number 2. T Rowe is number 4 with a total of 9 points. They managed to score a lot of points in the second round, but it's not enough. Both ADP and AFL share the third spot with a total of 10 points. And that's really impressive because both were dead last at the halftime score. And now there are 2 spots left with 2 companies. CVX was the halftime leader, but Caterpillar did a phenomenal job in the second round, after a slow start in the first round. And with a total of 12 points, it's Caterpillar who's the winner of this video. CVX is the second one, with 11 points and failed to score a single point in the second round. And it kinda surprised me to see these 2 companies manage to score so many points. I'm definitely going to do a full analysis on both companies very soon, since it seems that they are really looking interesting. So to wrap things up, what were your thoughts on this list? Were you surprised by the outcome, or did you thought some companies would deliver better results? Please let me know in the comments down below. In the coming months you can expect more videos like this one, so stay tuned. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.